That's it. Yep.
Hello everyone, good morning and welcome to this morning's Forex webinar. Oh, we're on time, that's absolutely brilliant. Before we start, can I just draw your attention to the disclaimer that I think you can see, should be able to see on your screen. As you know, this is a trading in general can be a very risky business. Please don't ever use money that you cannot afford to lose. Right, let's just in fact, let's move straight away over to trading Forex just to catch up and see what's happening. And before I quickly run through what the highlights have been overnight. Certainly from what happened yesterday evening at the close of the US session. And those of you who were with us yesterday, we actually had a webinar where we cover the American market, specifically with the indices and stocks. We'll know that we had some very, very dramatic price action, which has actually carried over into the Far Eastern session. And as you can see here, Asian markets equity traded mostly higher on what was a turbulent session. And what we covered yesterday, we obviously covered the price action, the VPA lessons that the charts delivered, but we also looked at from a trading perspective, traders who trade the indices and trade stocks, is the importance of looking at related markets. And the related market that we highlighted yesterday was very much the bond market, and in particular the 10-year bond. Now, the 10-year bond for Forex traders is also very important because at the moment it is correlating quite strongly with the US dollar. Now, before we carry on with that, let me just pass over to David. I promise you, I will let him have a word in edgeways, and he will say hi, and then we'll go and look at some charts because we've already had some really nice moves, particularly in the majors.
Thanks, darling, and a very warm welcome to you from me as well. Just very quickly, if this is your first time to this session, good to have you here, and welcome to those who come along regularly. If you have any questions, please just drop them in the chat box. We're happy to answer them there. If they're short questions or longer questions, we'll answer on air for you. Basically, we run this as a two-hander. Anna will be on the MT5 session, on the MT5 platform, and I have the NinjaTrader platform running on my side. So we flip-flop between the two, and we'll just pick things up as we go along. I'm going to pass back to her, and we will get going.
Thank you, darling. Right, I'll just put myself on. Right, let me just get rid of that. Let me just bring up some charts, which are far more interesting to look at. And in fact, just as let's have a look. Let's move out of this way. The time. Let's move that down there. Yeah.
Bit of a reversal coming up.
Sorry?
Bit of a reversal.
The reversal coming up at the moment. Yes. Right. What were you saying? Okay. The looking at as I said, the trading Forex headlines this morning. Yes, it's been interesting on the certainly on the stock side. In fact, the current sell-off, the market volatility that we're having at the moment. I think the blame was very much laid at the Shanghai index, and also these worries about trade wars, etc., etc. And then yesterday we had earnings from, I think, Caterpillar and 3M. They weren't very good, and that supposedly precipitated the sell-off. But as I said, if you were with us last night, we were looking at the charts and the BPA, and it was all a lot of sound and fury. And in fact, they came back very, very strongly at the close of the session. Now, today is actually quite important for stocks as well, because it's the big guns that report. I think we've got Amazon, we've got Alphabet, which I think is Google, and you know, the headlines are already saying, well, of course, if they come in with good good earnings, then that will help to stabilize things, etc., etc., etc. But I do urge you, I know those of you who come to this session are very much interested in Forex, which is fine. But as we say in the program, the Forex program that David and I have put together, no market moves in isolation. Pairs don't move in isolation. Currencies don't move in isolation. All these capital markets are interrelated. And once you understand the relationships between the capital markets, it will make your trading. It will just open your eyes to what is happening in the financial world. And just to give you an example of this, I've actually got the Aussie yen down here as one of my 6 pairs, and the volatility that we had in the equity market, and the fact that I think the Nikkei has come back quite strongly as well. That is going to be reflected in what we call the risk currencies and the risk pairs. And you can see here, this is the Aussie yen. The Aussie yen is also a great proxy for risk. Generally speaking, when the markets are in what's called risk off, in other words, the sun is shining and everybody is happy to take on more risk, you will find that the Aussie yen will be reflected in that, because the Aussie is a commodity dollar, and when paired against the yen, and the yen is one of these currencies, it's the second most important currency after the US dollar, where essentially it's like Janus, it faces both ways. It can be both a safe haven currency, but it also be a currency of risk, and that is partly due to its historic role as a funding currency. In the good old days of the carry trade, when we first started, where you had this huge interest rate differential between countries such as New Zealand and Japan, where New Zealand's interest rate was something like 7%, it even went up to 8-9%. It was huge. Japan was still languishing in 1 and 2%. It was a great pair to buy, because you would make money on what was called the carry. You bought the New Zealand yen, and your broker would pay you that differential between the interest rates. Happy days, as we used to say. Right, so to get back to what is actually happening on the markets at the moment, literally up until the moment we started, what we've been looking at, in fact, the US dollar. Here's my CSI. This is my 3 minute. In fact, let's go 3, 6, and 12. Here we are. It's actually still climbing on the 12. We can see on the 12-minute chart. I'll just have a quick look at my hourly chart. My hourly chart, this is something we talked about yesterday as well, is on time horizons and time frame, and how you have to decide which, first of all, the time frame that you want to enter your an order on, but also what you're going to benchmark that against. And it was also precipitated by an email I had from someone who is now looking to move into trading stocks, and on an intraday basis, and he's looking at very long term, the dailies, even further out than that. Well, if you're going to be intraday, by definition, you are not going to be holding that position very long. In fact, if you're an intraday trader, a lot of intraday traders, they close out at the end of the day, regardless of their positions. That's it. They're done for the day, and they start again the next day. But you still have to benchmark what you see on the faster charts against something. And as I said, if you're down here on the 3 minute, the 6 minute, then really what you should be looking at is possibly no more than the certainly the hour, or even the 30, or even the 20. Now, what that actually tells us is what the dollar is doing is, at the moment down here, which is where we're looking at on the 3 and the 6, we're seeing a reversal or a correction or a pullback, call it what you will. Now, depending on what time you come to your screen, we've been looking at these at the three majors. If I just pull them out here, you can see here, quite interestingly, both from the euro, which is this one, and the dollar, the initial move actually came, it was a breakaway from the volume point of control here at 29.83. It was actually a really nice little move. Now we've had some volatility come in, certainly on the British pound. We haven't seen that reflected on the euro dollar, and in fact on the Aussie dollar, it wasn't against the VPOC because it actually hasn't got into the VPOC. The Aussie is still trading in a kind of range. And the reason for having these three majors is also something else I want to highlight in this particular session. And this is another decision you have to make. Essentially, you have a choice of 28 pairs, and it's there's always something going on in one of the pairs. But when you first start, One of the decisions you have to make is, are you going to try and find a trading opportunity in any of the 28 pairs? And certainly if you have something like the CSI, this will highlight what is going on, not only with an individual currency, but also in a particular currency pairs. Now, you may be happy with that, but beware, trying to find, then making that choice out of 28 in your time frame, you can be rest assured that you can make a decision, a trading decision, and suddenly something much more, is much more lively in a pair that perhaps you overlooked for whatever reason. There's a piece of fundamental news. Something happens with Brexit. Countless reasons. Now, the alternative to that is to restrict yourself to a core number of pairs. You can make it 3, you can make it 4, you can make it 5, you can make it 6. You can put some majors in there. You can put a yen pair. You perhaps should have cross pair. You create your set of core pairs that you would like to, and you really get to know them. So here at the moment, this is just my suggestion. I've actually got 6. This is not actually my set myself. It's just, as I said, a suggestion. The next time around, I have some more workspaces with some other suggestions, and essentially we have the cable, we've got a pound yen, and we've got their yen equivalent, if you like. Now, if 6 is too many, as I said, you can just stick to 3. You can have 3 totally unrelated. They don't have to be 3 majors. You can maybe take a major, a yen, and a cross. It's entirely up to you. But then your focus is just on those 3. So what you then do is you look at what the chart is telling you, what your indicators are telling you, and you say, okay, what is the C state of this chart at this particular moment? What am I looking at here? So if I extend out the cable chart on the, let's go down to the 3-minute here. This is the 3-minute chart, and we had the 12-minute chart here. But you can see that the move, certainly on the 3-minute, was this breakaway trade from the VPOC. So had you come in here, at this point here, you have the VPOC, and you look at the chart and you let the chart dictate to you what is the likely tactic that you are going to use to trade this chart in this particular time frame. And clearly, when a pair is in congestion, as it is here, what is likely to happen next? Well, you're going to get a breakaway. Now, you may say, well, I don't like trading breakaways. I like reversal tradings. I like to take a reversal from either obviously when the price has fallen, when it's going back up, or I like to do the reverse. I like to see, move higher, and then it doesn't matter. But the chart will dictate, will highlight to you what type of trading opportunity it is actually offering you. Now, if that suits you, that's fine. And can I just say one other thing about reversal trading? Whatever tools you use, whatever methods you use to help you define those points where a currency pair is going to reverse from, whether it's a Camarilla, whether it's a support and resistance area, whether it's a Fibonacci, most traders are reversal traders. The key is, how do you identify those reversal points, if you like? Now, with us, it's using volume price analysis, it's using the indicators, and as I said, all the support and resistance and everything else that we then put together. You can take what we suggest you do, and you can blend them into perhaps a system that you already use. And we can see here on the 3 minutes, this is the reversal. The decision you have to make is whether the reversal that you see, the correction that you see at the moment, is it sufficient? Is there enough in there for you to take a trade? Knowing that, if we look at, as I said, on the 12-minute, all we're seeing is, this was the breakaway from the volume point of control. Now, this reversal, what's also happened on the 12-minute chart is it's triggered the volatility indicator. This is this little purple dots that we see top and bottom. Now, with volatility, when that is triggered, what we can almost be guaranteed, not 100%, but pretty much, is when that is triggered in a slower time frame, the reaction that you're going to get to the price, it is going to go back into the spread of the candle. So maybe what is happening. We see down here, this is just a push. In fact, it's triggered here as well. It did follow through. We have to then look at our volume profile, we look at the price action and everything else to see how valid that reversal is likely to be, and whether we think, do you know what, it's been a very nice move down lower, it's just a reaction. Maybe if you got in here, maybe with 2 micro lots, well, you come out here when this volatility came in and you keep your second one going and just see what happens. Right. Anything you want to add to that, David?
Absolutely. Right. No, that's fine. Just stay there on the 3 minute. That's fine. Thanks, Danny. Just a couple of points to add to that, to what Anna was saying. First of all, it really does highlight the issue of using multiple timeframes. Obviously, when we're running these webinars, it's to cram the screens with, what we would look at or you would look at as a trader with several monitors and multiple screens. It's impossible. So we do have to try and focus on timeframes and a single time frame and just flick around those timeframes on the chart itself. Also makes it a bit more, a little bit easier to view as well. And this really does highlight the issue when you're looking at this on a 3 minute time frame, and when you go down to a slower time frame, you get all the different signals. I made the point last night that we were looking at the YM, I think, on a 5 minute time horizon, and we were looking at 2-bar reversals and on that particular time frame. And of course, when you overlay one over the other, a bearish engulfing or a bullish engulfing candle, what you're looking at, in effect, is either an up thrust or a shooting star, or a down thrust and a hammer, which are 2 of the most powerful candles. Now that you can do very easily just by overlaying one on top of the other. Not so easy to do it when you're looking at groups of candles, which is why using multiple timeframes is so important. The other point I wanted to make about this, first of all, we're at a session crossover. We've come out of Europe, we've come out of Far East and Asia, and we're now into the European session. And you see this repeatedly. When we move through to Europe from Far East Asia, you will often see volatility. You will often see reversals in what was the dominant trend at that point. The same is true when we move through to London in about half an hour or so. And equally, the same applies when we move to the US session from London. You see this all the time, and it's purely down to the fact that one center has opened following another, and for whatever reason, those trading desks are opening up and the sentiment reverses, and it's an opportunity for the market makers to trap traders into weak positions. The other thing I also wanted to highlight here is quite interesting on the volume. Europe has opened roughly 6 or 7 candles back from where we are at the moment. And if you look at the 3, or certainly the 2 blue up candles that followed the reversal candle with the volatility on that particular chart. So in other words, where Anna's cursor is, there we go, those 2 candles there. If you look at the volume there, and then look right over to the left-hand side, where you've got much more substantial volume going back into the middle of the night, for us at any rate, even further to the left. Have a look at the volume there. Keep going, keep going, keep going. Look at the volume there. Now, what's interesting about that is that we are looking at volume in a European session, which theoretically should be more substantial than in the Far East Asia. And generally speaking, it should be the other way around. We should see high volume in Europe and certainly much greater volume in London. And the Far East Asian session, the volume there should be squashed. It isn't. It's actually more dramatic in the Far East Asia, where Anna's cursor is, than on those 2 candles that have reacted to the volatility on the rise. So what I'm saying is that generally speaking, obviously the point we make is you have to compare volume within a session, which is absolutely true. But on occasion, when you look at it, it does give you a heads up as to what went on before, because here we have an anomaly, if you will, in terms of the volume in Europe should be much higher, and it isn't, as compared to the volume in the Far East Asia session, which was dramatically higher than that is going on in Europe. Sorry, I was distracted by the by the message that came up. So it's a curious fact, and you start to look at volume in those terms, and you start to think, well, was that a genuine move, or was this actually a trap move? Because the volume should be much higher, and it certainly should be higher than what was going on in the Far East Asia session. So it's been certainly an interesting phase of price action over the last 10, 15, 20 minutes. And that kind of gives you a heads up as to whether that move is genuine or not, and whether that move is likely to follow through or not. Because certainly looking at it from a volume perspective and from the perspective of what we should see in a major center opening up, that does not seem to be the case on that reversal higher. It seems to be too low, and the effort to rally, given the price action and comparing it to some of the volumes in the Far East session, it looks very lightweight. And if you're trading that, you're remaining short for the time being, that should give you some confidence to hold for the time being and not be shaken out of this particular move. As you can see at the bottom there, the trend monitor has remained steadfastly red there, solid red throughout. It hasn't flickered, but again, you would be looking at this. I mean, if you were trading a 3-minute time frame, if that was your window of opportunity, if you will, then you'd certainly have maybe a 1-minute and a 2-minute running alongside, and you'd have maybe a 5-minute to the other side. But certainly on the 1 and 2 minute, you probably would see some changes there. But for the time being on the 3-minute, there's no change on the trend monitor. The trend dots have transitioned, but that's a fact of life because they are much closer to the price action. And when you put that all into context, then going down to the 12-minute, we are trading in a pretty tight range, and it all comes back to your view of life, how you want to trade these markets, what time frames you're comfortable with, what time frames you're not. And that's the classic example where we're on a slightly slower time frame, and it gives us another load of information. We know we're going to be trading in a price range, generally speaking, when the volatility is triggered on the blue candle there, then the price action has moved outside the average true range. It's supported by volume, so we know we've got volatility in the market. Our expectation is for a reversal back inside the spread of the candle, which is what we're seeing at the moment. It doesn't always do that. There's no always in trading, but that's the anticipation. That's the expectation. So when you see that on a slower time frame, it doesn't cause you alarm on your faster time frames because you understand why it's happening right now. And that's really all trading is about. As we said last night, it's really about managing your emotion, and that's what VPA is at its heart, if you will. It's about seeing something on the chart which gives you an understanding of why the price action has behaved in the way it has, and in understanding why it's done what it's done, that helps to calm the emotion when you're trading and you're trying to maintain a position in the market, and it gives you that confidence either to hold or at the very least to understand why something has happened, and therefore you don't have that emotional response, which is the biggest trigger to making emotional decisions in trading, which causes us all so many problems. So that's really what VPA is about. Is it about anticipating? It's about understanding why something has happened, and of course supported by all the other indicators as well. I'm just going to pass back to Anna. Okay.
And looking at the other majors that we, just to compare in the same time frame, what's been happening in the three that we've been looking at, and you're saying, well, it was that reversal. Was there a good opportunity to take that reversal without the volatility? And you can see here, they all moved. The cable, euro, and the Aussie, but without so much volatility. Euro dollar, we had a hammer candle as well. We had a hammer candle on the Aussie as well. So as I said, you then not only have the move in perhaps the pair that you decide to take a trade in, but also you have a context of saying, well, what is, because you do have in this market, you have rotation, you have market flows. So if the dollar is being bought or sold, is it being sold more strongly strongly in one particular pair than in another. So it's all context. Everything is context. The price action is you have the context of what's happening on the fundamental news side, and there isn't very much on today. It's very much the end of month. You know, is the driver for what you're seeing on your screen? Is it therefore outside the markets? Is it political? Certainly with the pound, anything to do with the pound is going to be you know, because of Brexit. In the euro, what's happening with the euro? Well, you know, all sorts of, not so much Brexit, but certainly as the headline that came up with what is happening with the Italian budget. And what you'll also see by having the three is you know, do you have divergence? Do you have sentiment in for one currency in a pair going one way, but it isn't reflected, if you like? You haven't got this consistency of flows. That is also another factor. And of course, you know, those of you who have the quantum tools will know, which is why we developed tools such as the matrix, the array, because when you're in a trade, what you want is confidence all the time. You want the confidence to say, do you know what, I'm in this trade, I'm seeing this volatility, you know, price is spiking here, there and everywhere. But as David says, with this methodology and with the quantum tools, what you want is you want to be able to manage the emotions that are inevitably triggered when, particularly when, you know, the price seems to just sort of either fall out of bed suddenly or suddenly shoot up, and you think, oh my goodness, what on earth is happening? Now, sometimes that will take your stop out because the reaction for whatever reason is just too strong. But at least, you know, looking at it much more dispassionately and looking at the price action more through the prism of volume price analysis, it will actually help you manage. You say, yeah, I know what's happening. Yeah, fine. I've had volatility. In fact, 2 volatility candles here on the 6 minute. But you know what? It's all a bit of sort of stuff and nonsense. It's just typical. Now, if this is too much for you on these faster time frames, then and you think, oh, I can't, you know, this is because I can't be at my screen, or I don't really, you know, temperamentally I can't deal with this. Well, then we look at, you know, perhaps move to the slower time frames. You look at the hour. As I said yesterday, your hourly chart would be perhaps your entry chart. So what are you going to benchmark that against? Well, you're going to look at, obviously, even slower. I probably wouldn't even go up to the day on that one. I'd probably go something on maybe the 8 hour, and then you can take a much more measured view and perhaps use limit orders. You say, do you know what, when it gets to this point, I think, you know, I'll place a stop in an order in the market. Ultimately, it all comes down to your temperament. And the reason we look at the faster time frames in these sessions is because, you know, we're limited on time, and you know, we want to show price action, VPA, and obviously the indicators, you know, actually happening, and something happening, as it were. And of course, we're coming up to the London Open soon, so as always, anything can happen, and usually does. Just going to move over to David because he's got the NinjaTrader platform. I think you've been looking at something completely different, David, haven't you?
Yeah.
Yep, he's been looking at something.
At the moment,
oh, he's actually got the pound yen. I haven't looked at the pound yen. It is one of the pairs I have here. Let me just, as I said, on my, there we are. Yeah, and for once, which is quite unusual actually, this is a hugely volatile pair. Moves and can move very, very fast, very, very quickly. It can be your best friend or your worst enemy. No volatility candles, which is unusual to say the least. So I pass over to David, and we'll have a look at the pound yen on NinjaTrader. And of course, if you've got any questions, please just drop them into the chat box. Nice move on the pound yen.
Yeah. Just switching screens, and just click that one, show my screen. Should be coming up. There we go with the pound yen, which I just flicked over to just to really just watch it through the London Open. It's been a decent move since around 6 o'clock this morning. And what I've also done is I've isolated out the pound just to get a sense of the universal sentiment in the market towards the British pound right now. As you can see on the pound yen, what's interesting at the moment, certainly we're on the 5-minute time horizon here. a couple of things just to highlight. First of all, this was the volume point of control at bang on 146. So we were, around about, just move the chat down out of the way if I can. So we were, that's the heaviest concentration of volume. The pair has now moved through there, and more importantly, what it's now also penetrated is this potential area of support, this very heavy blue dash line, which is the accumulation distribution indicator on Ninja, but it's exactly the same principles as on MT4, MT5. It's price-based support or resistance. In other words, how many times that region has been tested or retested, has it held, has it not held? This is a pretty heavy area of potential support. And once the candle closes below that, then you've got some decent protection above in terms of any reversal. In addition to that, what we should also expect to see is, providing this candle does close a decent way below, we would expect to see associated and confirming volume beneath that, but we have to wait to the close. I've actually got the volume here on updating on close rather than in real time, just because I've got so much data coming in at the moment. And the other thing about this also is that the volume profile here in this region, it's starting to build a little bit, as you can see there, literally in real time, but it's still very light compared to the volumes up here, certainly volumes higher up the chart. So if the price action does move below 145.90, 88, one would expect it to move through there pretty quickly. The other interesting aspect of this also, again, moving back to just very traditional volume price analysis perspectives, is this is 7 o'clock, this is European Open. The nice thing with NinjaTrader is you can actually spot exactly where sessions open, because it is done to your local time and not on MT4, MT5 where it's to the server or MetaQuotes. But the nice thing here is you can see we're opening up, we've got decent volume coming in, but then as we get this little rally, this 2-candle rally, we have the volatility on the first one and then an attempt to rise here, but look at the volume, it's fallen away. So again, it's giving you a heads up that this is not a particularly strong move. The chances are that this is what we call a secondary trend. If we consider this as our primary trend at the moment, which is bearish, then what this is a secondary reversal higher, as indeed we saw here. We're in the primary, we get a pause point, we get a secondary pullback, continuation of primary, back into the secondary again. Very low volume, but bear in mind this is Far Eastern Asia, so that is typically what you expect to see. If you were seeing this sort of candle formation in a session that is where you're comparing apples with apples, for example, these sorts of candles are immensely powerful. As Anna said, where you choose to get in. If you're a reversal trader, you might have seen this setting up on the CSI, for example. You might have seen the pound very overbought and the yen oversold. Or whichever way you're trading, and at that point you decide to get in on the potential reversal. Well, if you get in around the top or the bottom, then you're getting in early. The cost of that is in your stop loss position, because you'll have to set the stop loss wider to accommodate for any buffering that goes on. In other words, suppose you saw this as a potential reversal. This is not uncommon. You see the trend start to develop, you then see it rally again, and then you're into that. Is very, very typical. And in this phase here, you've got a stop loss which is set pretty wide. You've got to allow for that, but your payoff comes when the trend does ultimately start, and it will, because these markets are all about mean reversion. In other words, no currency ever stays overbought or oversold forever in whatever time frame. It just doesn't happen. The markets move constantly. They are constantly moving from overbought to oversold and back again. And that is what you're trading all the time. Okay, so we've closed that, candles closed below that pretty strong level there. Volume, I have to say, doesn't look terribly strong, but then equally, we're coming into the London session. So we've got, 2 candles here. We've got falling volume at the moment. Maybe that's giving us a signal this is not a terribly strong move. If we were going to continue holding, obviously what we would have wanted to see, given that these 2 candles are pretty much the same in terms of price spread, wicks are a little bit different, but you can pretty much say they're more or less identical. You would have expected to see similar volumes associated, but actually what we're seeing is a decline in the selling pressure. So maybe we're starting to see a little bit of weakness there. That's not to say this is going to reverse. It's just simply telling you that all things being equal, we would like to have seen that rising rather than falling, because markets require effort to fall in exactly the same way as they do to rise. Yeah, I'm just going to pass back to Anna. Do you want to stay on this screen or?
No, I just wanted to show you.
Okay.
This was quite interesting on my multiple. Okay.
Just switching back to Anna's screens on MT5. Yep.
We'll go back to David because he's got a couple of other things as well. But what I wanted to highlight here was something which was quite interesting. If we look at the CSI on, I've got it on the 3-minute. Actually, let's have a look at the 6-minute, which is quite interesting. And the move in the pound, although the dollar was falling as well, which was the sort of correction we saw in the pound. But look. The pound is being driven ever lower, and if we look at the 3 charts that we had, in fact, if I just pull them, this is the pound yen David was looking at. Have a look at the, there we are, and you can see that, as I was saying about the divergence. First of all, go back to the we've got the 3-minute chart here as well, and as we highlighted, the correction higher. Let's go back to the 3-minute, it's probably easier. Here we are. The correction higher that David was looking at, and this fall in the volume. First of all, these 2 volume bars that we were looking at here. Then we had this effort to rise, and we had falling volume as well. It kind of told you that possibly this was, it was simply that. It was just a reaction higher, partly driven by the volatility. There wasn't enough support from a volume perspective to actually, if you like, confirm that it was a genuine reversal. And we can see that as well on the 6-minute chart. But that was also at odds, if you like, with what was happening in the euro dollar and certainly on the Aussie dollar as well. But it's also highlighted, as I said, which is why I think, if there's one, I suppose if there's 2 indicators, we would urge anyone to buy. Obviously, it'd be lovely if everyone bought the package, because we've developed these. We develop them for ourselves to support our VPA methodology. But if there's 2, if you've not invested in any of the indicators, there's probably 2 that I would think you'd start with. First of all is the currency strength indicator, so you can pick up the movements both from an individual perspective for currency, but also on the pairs, and how that individual move is reflected in the pairs is the CSI, and the other one is the volatility indicator. I think that one, and I said it yesterday as well, it doesn't matter what you trade, what market you trade, if you can identify volatility in real time, because it is triggered in real time. All indicators are delayed to some extent. We can speed them up as much as we can, but the volatility indicator is not lagged. It is based on average true range, and it triggers the instant that price action moves out of the average true range. I just thought it was interesting that what the CSI was showing. I'm sorry it's all a little bit cluttered, but I don't have any. It's very difficult to show all this complexity on one chart. So that's what I wanted to say. Shall I move back to you, darling? Is that okay? And also, can I also reiterate, as always, we've got 5 minutes to the London Open, and we will see what happens.
Indeed.
Something always happens.
It generally does.
Okay. And
just switch back to Ninja. Should be coming up now. Have you got the screen there? Yep. And isn't it interesting? There we go. So what have we got? And really, this very, very simple lesson here just highlights the power of anticipation and expectation and managing your emotion. Because if you were short in here and you see this occurring, this decline in volume, putting to one side the fact that we've got the London Open coming immediately ahead anyway, where we will probably see volatility. We may see quite strong reversals coming in, trap moves, all sorts of things occur at 8 o'clock and through to about 8:15. But if this were just a general session and we were trading through this, that is the signal that gives you that confidence to say, well, actually, what I'm expecting to see is possibly a slowdown, possibly the next candle could be an up candle, purely because you've seen this decline in volume with a falling market. Falling market with falling volume is a sign of weakness. It's not a sign of strength. If that was a sign of strength, you'd see rising volume in a falling market, and you haven't. In addition to that, we've got this level here. We actually broke through it marginally. We actually have gone back through. We've got decent volume under this up candle. We're not far away from the VPOT. Bear in mind that what you're looking at here in terms of pips, this is 146, this is 145.95, this is 145.90. So we're looking at 10 pips here. And given that the spread on the pound yen is generally somewhere between 5, 6, 7 pips or whatever, this is a relatively tight trading range. So, it's not it's not that big a deal right now in terms of what is going on. But it's interesting that just a very simple analysis gives you that heads up and helps to calm the emotion of why something has happened. And we're just on one chart. You'll be looking at this in multiple time frames. I said earlier on, I've actually isolated out the British pound just to get a sense of what is going on. This may well reverse in due course, certainly over the next 5, 10, 15 minutes, depending on how the markets react and Brexit news and all the rest of it. But as you can see here, it's pretty universal at the moment. This is a 5-minute time horizon. We've got universal selling. You can see it over here. The weakest currency at the moment in terms of British pound anyway, the heaviest selling, if you like, of British pound is against the Aussie. You've got the pound Aussie here. We've got the pound New Zealand, pound Swiss, and pound yen. Pound yen is actually at spot 24. But you can generally see these are all coming down to this region. And the euro pound is obviously going in the other direction because the pound is the counter currency there. So in an ideal world, you'd want to see this march to the top if you're short, and these others all stacked up at the bottom here. Quite a lot of volatility going on. There's a lot of jumping around at the moment, but that's pretty much the sentiment for the pound at the moment. Just go over to the currency matrix. I've got the dollar isolated out on this one, so let me just change that back to the British pound. Just go back there. Again, I've got this on 5-minute. And there we are. It's just representative of what is going on. We've got the pound yen pretty much at the bottom here on 5-minute, pound New Zealand, pound Swiss. So in terms of the indices themselves, this is the yen index, which I've got at the bottom of the screen here. So what you're seeing is the sentiment towards the market right now. Is it risk on? Is it risk off? What is going on in terms of the yen? And we're starting to see a little bit of an uptick in the yen itself. If we go to the dollar, this was the early move in from 7 o'clock. This was the European Open here. Then we had the pretty strong sell-off again, strong reversal. Now we're in sideways congestion, certainly on the 5-minute time horizon once again for the US dollar. And finally over to the euro. This is the euro index. Again, we're in congestion here. We had this was the decent move from 7 o'clock onwards through that platform, what was platform of support, and is now acting as resistance to any rally higher. And we're starting to see, and obviously this mirrors what's going on up here because this is the euro dollar on the same chart as the euro index. So you expect to see those mirrored on the others as far as the yen's concerned. That's the euro yen I've got this attached to. So we're seeing a fall in the euro yen and we're seeing a rise in the yen itself on the yen index. And that's reflected in the euro yen and probably across all the other pairs as well. If we go back to the pound yen, what are we seeing? That's pretty much what we're seeing. We're starting to see a little bit of negativity coming again to that particular pair. But in terms of trading a trend at the moment, it's a question of being patient and waiting. And now we're starting to see London Open. Now we're starting to get volatility come in. This is the ideal opportunity that the market makers, imagine that major centre in London is opening up. Where are they going to take the market? What do they want to do with the pound? What's the news? Is there an opportunity to trap you into a weak position? And that's where volume comes into its own, because it really does help you to understand what is happening. The price action, is it valid? Is it being supported by volume? Are the market makers participating, or are they not participating? Or is this just simply a trap move to get you into a short position before the market promptly reverses strongly and goes in the opposite direction? and it's constant. This is what happens at 8 o'clock. This is what happens at 1 o'clock in the afternoon, our time, as London rotates into the US session. And of course, we've got the London fix, and we have the New York options expiries. There are prescribed points during the trading session where you expect this kind of price action, and at other times during the day, it's prompted by news, fake news, real news, fundamental news, events around the world, Donald Trump's tweets, goodness knows, that's what you have to face every day. It's just a fact of life. It's just, it's called trading.
That's why we love it.
And that's why we love it. Just see what's happening on the CSI. This is on 5, very heavily overbought the pound, as you can see. And what's happening now is we've got the yen rising. We've got buying of the yen, but we've also got some buying of the pound coming in here, the yellow line. So it's no surprise to see that in that time horizon, at any rate, that the pound yen at the moment is not actually going anywhere, because the currencies themselves are moving in the same direction. So the pound is rising and the yen is rising. And it's like a parallel train track where you've got two sets of trains moving in the same direction, pulling out of the station. One may be moving at a slightly differential speed to the other, but in terms of any trend developing, there's very little divergence of force. If you've got two trains traveling in the opposite direction, that closing speed is huge. And that's really what you're looking at. And what you're looking at here right now is, certainly from a pound-yen perspective, you've got the pound rising and you've got the yen rising. Now, if the yen rolls over, gets up to overbought and starts to roll over, and we start to see yen selling coming into the market, that is the point at which you will see a development of a decent trend. But until that happens, you won't, certainly on the 5-minute time frame at any rate. And of course, again, it comes down to personal choice. Do you want to wait and see that happen, and then you take a reversal position, because at some point the yen will reverse? It has to. It can't go on overbought forever, or indeed oversold. So do you take a reversal position on this early in the anticipation of getting into that trend early, or do you wait for that trend to get underway? And to go back to the train analogy, that is what you're doing when you're jumping on a moving train. But your stop loss can be much tighter because the trend is already in development. It's already happening. Where you're taking a reversal position, or maybe where you're taking a breakaway position, you have to set your stop wider because you're not sure when that will happen. It will happen, but you're not quite sure when. So you have to allow for that buffering in terms of the price action.
This one, actually, on the 3 minutes, it's kind of kicking over now already.
Is it? And this is what's going on in terms of London. This is what you see classically all the time. A lot of volatility. The London session's opening, lots of volatility, lots of opportunities to trap you into weak positions. And as I said, this is just such an amazing indicator. It's the volatility has been triggered in real time. This candle hasn't closed yet, but you've got the triangles top and bottom. Slightly different on MT5, it's dots, and on MT4, it's triangles. But the principle is exactly the same. So this is triggered in real time. It's not, you don't have to wait until the candle's closed. This is telling you right now that the price action has moved far enough out of the average true range to trigger the indicator. So we know we've got volatility. We know we've got it anyway, but it just immediately gives you a signal that you have. And we've got this deep wick to the bottom, and we've got a wick to the top. So, all things being equal, this is going to close probably, maybe as a long-legged doji candle with a lot of volatility. And we have to be patient, but it's just giving you that heads up instantly. And it also highlights what goes on at session opens. There we go. We've got a ton of volume coming in. Now that volume is London. So it compresses everything that's gone before. It's not exceptional. It's only just giving us the information that London is now open and we expect volumes to be that much higher. If this were during a session, it would certainly set the alarm bells ringing, and we'd need to pay attention and find out what's going to happen. But we've got nothing at the moment against which to judge this candle, this volume profile, other than to say we know why it's high. It's because it's London's open, and we can't compare it to, because this was Europe in this hourly session here. So you have to wait. If you're on a fast time frame, you've got to wait and be patient for a handful of candles to start to build. You wouldn't be trading in here anyway because we expect the market to consolidate, not only because of the CSI, but also the fact you've got this volatility candle. We're expecting consolidation. We've got the volume point of control up here. We've got a strong level of support below. That's everything, putting that all together. We just have to be patient. If you're not in a trade right now, it's a question of sit on your hands or go and look for something else in a different pair that is potentially offering some opportunities, because this one isn't right now. Just see what's happening there on the pound. Still anchored down the bottom there pretty much. You've got the pound yen here on the array, pound Aussie, pound Swiss, pound New Zealand. Few of them are starting to maybe move a little bit higher. We've got the pound CAD, the pound dollar here as well. And of course, all of that's being driven by the dollar. Just see what's going on in the dollar. Big spike move up on this is dollar now. This is the dollar index. So we've seen a very strong move in euro dollar. Let's just have a quick look at, see what's gone on in cable. See if that's reflected. Yeah, it's reflected in cable as well. This is what you expect to see. This is a traditional open. We've got volatility candle triggered again, a lot of volume coming in, but that is what you expect to see. And this reversal, from this bearish phase here into this congestion phase in Europe, and now we're starting to see a reversal into a bullish trend. That is classical. But don't be surprised if this market shoots up in the open in the first 5, 10, 15, 20 minutes. You think, great, everyone's buying the pound. This is going to be a nice trend higher, for it to then promptly be reversed thereafter. It may or may not. It just depends on what the volume tells you. As you can see here, we're on cable on 5. We've got some pretty strong resistance overhead. We've got 3 levels here, the blue, the red, and the slightly thinner blue lines here. In terms of the volume associated with the VPOC up here, we've got the VPOC down here. We've got low volume nodes here. So if the market does get up to that level, but isn't it interesting, it's already tested that region there, 129.84, big spike up, hit that bang on, and now it's moving back down again. It's putting it all together. It's not just about volume. It's about putting together the other aspects of volume price analysis, which is support and resistance. It's about levels. It's bringing in the other indicators. It's looking at time frames. And of course, it's looking at volatility as well. I'm just going to pass back to Anna. Yep.
Can you see?
Yep. Got it.
I think you can all see my screen. Right, we've run slightly over time, so all I can say is thank you so much for coming along today. Before we run off and you run off as well, just very quickly, I did have some new slides. I haven't had a chance to. I can't find them actually. They're on my desktop somewhere. And when you're looking for something and you can't find them. But very quickly, the indicators that we have here, as I said, the quantum trading one, we do sell them as a complete package. Those are the prices for the complete package. It's 894 for MT4 and 5, 1197 for NinjaTrader, and you can pay on what we call the EPP. It's over the payments are spread over 3 months, but you can buy the indicators individually. And as I said earlier, if when asked, and for Forex, and I'm always asked this question, if there's, what is the one indicator that you should invest in? I would always say certainly the CSI, followed very, very closely by the volatility indicator. This is where we are. This is, as I said, the indicators are part of of our Forex education program. So we're actually broadcasting to you from the setup that you see on the screen, and the program is 1391 for MT45, 1694 for Ninja 7 or 8, and that's because there are more indicators in Ninja 7 and Ninja 8. But that does include the indicators. I don't think I made that. Somebody emailed me a little while ago and they said, oh, if do I buy the indicators and then I buy the program, and that's one of the things I want to make a little clear on one of the slides, is that 1391 includes the indicators. So the actual program, the course price is less than $500, for which you get 50 hours of video and video podcasts. There are PDF downloads. There's a ton of resources. It's all very much self-directed. You can take as long as you want to go through the program, and it's a really deep dive into volume price analysis and Wyckoff's laws. There's that actually you can port into other markets. So the technical analysis module, as I said, is very much applicable not just to Forex but to any market and any instrument. But it also includes a fundamental module, a relational, related markets module, the mechanics of trading, the psychology of trading, and really everything that David and I believe you need to know to become successful in this in this very tricky market. Let's be honest, it's marketed as a very simple market. All you have to decide is whether something going up or is it going down. I wish it were that easy. But if you want more information about the program, the website you need to visit is quantumtradingeducation.com. The indicators is quantumtrading.com, or you can email me, Anna@Coulling.com, or you can email, in fact, David there's David at quantumtrading.com, or there's helpdesk at quantumtrading.com. Now, I have mislaid also the my link to we actually have a new chat room, which is called VPA Traders, and that is open to anyone. If you want to come along, David and I are there. It's really all anything to do with volume price analysis. We also show the indicators as well. Lots of traders in there. We've had lots of sign-ups. If you're interested in signing up, please do send me an email, Anna@AnnaCoulling.com. You do have to be sent an invite a registration invite from myself. And we've had some a fantastic contribution already from our users, people who use volume price analysis, and we've always wanted to find a place for volume price analysis, and hopefully, I think we found it at last, David, haven't we?
We have.
Anything you want to add to that?
No, that's it.
No, that's it. Brilliant. Have a brilliant day's trading. Next week, we're back at our usual dates, which is Monday night for US stocks and Tuesday morning for Forex. So have a fantastic trading day. Enjoy the rest of the week. Have a brilliant weekend. We'll catch you next time. Take care and